coming to you from the Dallas trading floor at a remote location in Dallas, Texas. The market is very interesting today. We had a snapback rally. There was a follow-through day on Thursday, but be very careful with this rally as the volumes are very low. That's the thing to really consider here, is that the volumes are very low. So this is probably not a bottom. The reason that the reason it's been trading up is because the coronavirus cases are actually, seems like they've peaked, which is a great thing. I'm just hoping that's the case. I think that from what I've heard on the weekend, they were at the top in the New York City area, and they look like they may be coming down, which would be tremendous if that was true. But anyways, there is a snapback rally, not a lot of volume on this rally, and that's something that you really have to be concerned with here, is that the volume is not great. But there was so situation that's good. I mean, I'm hoping that we're going to see the end of this. We're still in a recession. We haven't made a low. The market is trading up. I closed out my short positions on Friday, thank goodness, because they did move up very strongly in the morning on Monday. This morning, they moved very strongly up. So I was glad I did that. It looks as if we're going to be in a situation where I may be reshorting the market on the SPY if the SPY gets beyond 265. I'm looking to possibly move my position to a short. Currently, I'm all in cash. I have no holdings. I did close out a position on the XLRE this morning. I did lose a little bit of money on it, but again, I'm trying to be safe rather than sorry. I may re-enter that if the SPY moves up to about the 265 range. It's currently trading. The SPY is currently trading at 261.02, and it looks like it may move higher. So that's very strong in terms of the snapback rally. But the main issue here is that the volume has not been convincing on this yet. So I'm not sure that we're not going to reverse again. Basically, with these kind of rallies, we're still in a movement. We're probably going to test the bottom, but currently we're in a snapback rally, and the snapback rally will probably conclude with a reversal. Now, the question is, when and where is it going to reverse? I'm looking at very closely at a level of 265 on the Spider to see if it has done a reversal. Now, interestingly enough, tremendously big day on Apple. It's $1 a share, which is phenomenal. And here I have a chart on this is the overall chart from Investors Business Daily. Basically, we're sitting at 77.30 on the Dow. The market is in an upward movement. That was indicated by a follow-through day, which we had on Thursday. But this is a very difficult one. This is a good to purchase the SQQQ. I wouldn't on the SQQQ. I would be careful right now because I think we're going a little bit higher. But when it turns, when the SQQQ turns, yeah, currently SQQ is down. It's trading at 18.32 right now. And again, you got to remember that the SQQQ I'm currently not in it. It's called the TQQQ, and but the thing is, you only want to be in this during a time when you only want to be this during a time when it's going to be the market is going to be moving up because it moves in sympathy to the market, whereas the SQQQ moves against the market. So be very careful buying the SQQQ right now until you see a turn. I think we're going to have a turn on the market. What I'm looking for the turn and is is the is the price on the spider. I'm looking to see the spider be about 265. That's the actual share price. And I think at that point we may see a turn downward. The spider still has not still has not it still has not tested the 218 low, which we had basically which we had in March. So it's very important. At the beginning of the March, there was a movement on the spider all the way down to 18. We have not retested that, but I do see I do see a potential retest, a retest on that. Interestingly enough, there are certain stocks that are doing quite well today. One of them is Advanced Auto Parts. It's up $10, which is absolutely incredible. Auto parts companies tend to do well in recessions. It's one of the it's one of the few areas that probably will do well in this recession. Now, the problem, of course, with this recession is very unusual because typically lose all of the demand, like doing this, I look to see how the general market is turning, and then I move out in front of it. The U-Pro. The U-Pro is also an inverse. Let's see. Let's see what the U-Pro is trading. Just for everybody that just came in here, what we're talking about are inverse ETFs. This is kind of an interesting animal. These are specialty ETFs that are used to move against the market when you can't necessarily short directly. And the advantage of these is that it allows you to it basically allows you to do things that you might not be able to do in your account. For instance, if you're trading in an IRA account, you can't short, but you can buy these inverse ETFs. Now the U-Pro is moving. That moves with the market, and that's up today. It's up a little bit. It's trading right now 245 on the it's where it's trading currently. So that's an interesting thing. Do you think crude oil has hit the bottom? Well, yeah, I think it really has, because I believe there is going to be an agreement. Interestingly enough, and this is really interesting. Up until about the 1960s, OPEC, powerful it is today. Before then, they had this thing called the Texas Railroad Commission, and I know about this because I'm here in Texas. The Texas Railroad Commission kind of functioned like OPEC in that it handed out quotas for drillers to be able to pump oil, and it basically smoothed out the oil price. I think we may come into a era again when the Texas Railroad Commission has a lot of power over production, and this is because the United States is now the #1 producer of oil. It's absolutely amazing, but it's true. So I do think that they're going to move for production cuts, and I do think that oil is going to go higher. But the problem is it's a demand problem, not a supply problem right now. Everybody's shut down. Nobody's driving. Here in Dallas, we have sub $1.50 gasoline. It's amazing. I haven't seen that in a very, very long time. Trump said that he would save the U.S. energy industry by imposing tariffs on foreign. I think that might happen. I don't think it will happen necessarily initially, but I think there might be tariff. I think we might be tariff. The problem they're probably going to scrap the Jones Act at least temporarily, and that will change the dynamics a little bit of how oil works. If they do tariff foreign oil, it will be primarily, most of the foreign oil comes in to the East Coast, at least from Saudi Arabia and other places in Africa. I think that they may tariff oil from the Saudis. We don't use as much Saudi oil as we used to. Typically, most of the oil coming into the East Coast comes from Africa and other places like that. But there is a potential that we will tariff some of the oil, and that would change dynamics and make the West Texas Intermediate from the Permian Basin and of Texas and New Mexico. That would make it more competitive in the market and stabilize the prices, and that would be a good thing. The problem we're having now, of course, is that we're in a situation where the prices are just not the prices are such that they're not holding up with the production, and it's difficult. It's difficult for the producers to basically make a profit, even though their feedstocks are very, very cheap. It's very, very difficult for them to make a profit on oil. So you're having a situation where they're just going to start capping wells, and due to the lack of demand, really, in the markets. So it's a very interesting, fluid situation. FAZ is 20. Well, let's look at that's interesting. FAZ. Let me look at FAZ, Bobby. Thanks for the heads up. FAZ. Okay. FAZ. Okay, this is the bear. Okay. All right. Right now, for just anybody out there, don't enter any of the bear trades right now. It's not a time, because the market is moving higher. There will be a reversal, but don't enter any of the bear trades. You're going to lose money in the short term, so be careful. Our Janet, today relevant to the future market downturn predictions? I think they are. I actually do. I mean, I'm not a super bear, but I've been shorting this market successfully since basically mid March. I mean, I've done well shorting the market. I do think we're going down a little bit more. Unfortunately, I'd like to see it up all the time. Obviously, I'm an optimist by generally, but I do think that at least in this period of time, I think we are going to go down. I think we're going to go down much much more. It's a good time to, yeah, it's definitely a good time to watch the market. We got to watch for the tell. There's going to be a tell on the market. We're going to go back and retest. The reason I'm so obsessed with the price of the spider is because it tracks the S&P 100, S&P 500, which is really the big cap. to have that kind of sponsorship. So let me look at blockchain. ETF. Okay, great. We look real quick. Okay, it's called Riot Blockchain. That's interesting. That's really interesting. Okay, it trades for 98 cents. I don't think it's. Yeah, it is. Okay, it is. The symbol is RIOT, Riot. So that's something that you might want to look at. I don't know. I'm not in it. I can't recommend it or not recommend it. But that's sort of the deal there. Let's see. It definitely is, and it's going to tank again. Yeah, probably. KION. Yeah, that's another one too. The problem with these is it's just the question of how thinly or not thinly traded they are. This is the problem in blockchain. This is the problem in Bitcoin. It's not that it's not bad. It's a bad idea. It's just that you have a situation where you can just lose liquidity, and that's why addressing it through an ETF is probably a little bit safer. Today is a good market day. Yes, it is. It is, but the thing about it is, if you're, this is a long day. This is a day to be long. If you're going to go long, but the thing is, when the market reverses, you want to short, you want to close your positions. But today, there's probably a little bit more juice, possibly on the TQQQ today. Let me look at the TQQQ. That might be a way you can play the upside here. I don't think this is going to last. My opinion is I think it's going to go down. Yeah, the TQQQ is up very nicely today. It's up, looks like about $3 a share. Looks like so this might be a way that if you're going to day trade it, which, by the way, you can do very well at if you know what you're doing. Yeah. You might want to play the TQQQ. It's 49. You could probably get, I don't know if it's going to reverse or not, but it looks to me like you might be able to get 2 points. No, it's moving down again. I would go long on this if it got to about 48, I think. I would go long on the TQQQ just for the day, but I would shut it up very quickly. I'm watching to buy SRS as the market dips back down. Not a bad idea. Differences between the SQQ and the TQQ. Thank you for that question. The SQQQ is a bear fund, meaning that it takes a position, short position, leveraged against the NASDAQ 100. So when the market is going down, the SQQQ goes up. Now, there's a companion ETF to it. It's called the TQQQ. When the market is going up, it goes up. So it removes in sympathy. So if you are playing direction, which, by the way, in this market is probably your best play, not individual stocks, because they're very difficult to figure out because we haven't really seen the fallout yet. But this is a directional market right now. Directional plays are the way that you can make money trading it, I believe. And this is an up day. So in an up day, you want to be in something like the TQQQ. But the minute it changes direction, you want to get out and you want to get into something like the SQQQ. That's the difference. Let's see. Expiration is at the end of the month. Yeah, that's interesting too. Okay, so why would there be a difference between the TQQQ and the SQQ? Because the TQQQ does not actually hold the stocks that the QQQ is the NASDAQ 100. It holds the 100 largest NASDAQ stocks, such as Apple and Microsoft. The TQQQ does not own the stocks. What it does is it owns call positions, levered and options in the stocks of the QQQ. So it's a leveraged ETF. Typically, a move in the a 1% move in the QQQ will represent a 2 to 3% move in the TQQQ. So that's what it is. The TQQQ and the SQQQ do not own the actual securities. They own they own options and on them. So that's how they work. So that's why they're different. Okay, so hopefully that makes some sense. The reason that you use these are short-term trading tools, basically to take advantage of the directional changes in the market, and that's really what they're there for. They also, if you have, for instance, a portfolio that's heavy in the QQQ and you want to protect it, you know the market's going to go down in a short period of time. You buy the SQQQ to protect it during those down periods, and then you sell it so that you don't have to liquidate your position if you are holding long. I can't find a DWT to trade. What's happening? Well, let me take a look. That's interesting. Why would that be? DWT. No, that's City. Okay, no, that's this is a note. Yeah. Okay, no, it's there. No, the DWT it's trading at 1475. It's up today. There was a tremendous blow off top in this. It happened. Let me just look at here. Yeah. The high was 39, and that was back on the 21st of March. There was a blow off top for this. Currently, it's definitely calmed down. Basically, you're going to see this thing spike when there's a reversal in the market. But other than that, it's not gonna move that much, and that's the case now. It's missing on Robinhood. Okay, there's an issue. There's an issue with Robinhood. I mean, I don't mean to be a party pooper here, but Robinhood has serious liquidity issues. If you have a Robinhood account, you might want to consider possibly closing that account because they may not be able to make their margins. I mean, I don't know. This is not I don't have this. I don't have it. This is not totally factual. I mean, I don't have any insight that anybody else doesn't. But Robinhood uses its float to basically keep itself in business, and it doesn't have the market makers that TD Ameritrade or Schwab or any of the big firms do. So in market volatility, you basically can't get your orders filled. That's one of the reasons why the Robinhood went down for 2 days. You know, everybody says that, everybody thought it was a system error. I don't believe that. I think that they just couldn't get they were not liquid in the market, and basically your accounts may be at risk there. Here's the thing about accounts in the brokerages. They're not covered by FDIC insurance. So you've got to be very careful. They can go bankrupt. And I'm not saying they're going to, but, I just think you have to be careful. The sad part is, Robinhood has a great interface. It's mobile centric. It's got a lot of things going for it. But in this market, it's just, it's not the app. It's basically the access to the market and the ability to back up the trades. And because everything went to zero commissions, Robinhood did that. The more thinly capitalized brokerage firms you have to be careful with because some of them might become illiquid. I'm just saying. I'm not trying to be a worrywart on a downer on Robinhood, but got to be careful. I don't know if they're going to be able to survive this. So those are my thoughts on Robinhood. You might want to consider, you can easily move your accounts over to like a TD Ameritrade or something like that is going to be stable. I just think it's a problem. Johnny Cash just feels it's just a different fund. Okay, yeah, not much found. Yeah, exactly. Yeah, okay. Well, here's the thing. There's a lot of Me Too funds out there. I mean, there weren't a lot of bear funds until very recently. It just wasn't something that was out there because the market was doing so well for like 11 years. It's been going up, so there really wasn't any demand for bear funds. But all of a sudden now with this downturn, there's a lot of demand for them. So that's sort of how it goes sometimes. Thoughts on okay, this is Planet Fitness. This was a real high flyer. Let's see. PLNT. Planet Fitness. Yeah, Planet Fitness. Well, it's up today. Boy, I just think this is a dangerous one. I just don't think they're going to do well. And the reason is because of the social distancing. I think that all these gyms had to be closed. Okay. So I don't think after this, a lot of people are going to go back to the gym, unfortunately, because I think that they're going to concentrate on just basically saving money because a lot of people are going to be hurt really bad from this. So I wouldn't be in the fitness space. It just doesn't appeal to me. So I'd be very careful with it. The low on Planet Fitness is 2377, and it's trading down, but it's been trading up and then down. So yeah, it's trying to find a bottom. This is going to bottom again. By the way, this might be an excellent short. Yeah, this might be an actually very excellent short at 41.88. I might be shorting this one. Wow, this is a good one. I'm going to write. I always get such great ideas from everybody out there. Okay, PLNT. This is possibly a short. It's at 41 right now. I think it's going to retest at 23. So you could possibly pick up 50% on this one. That's 41.98. All right, I'm looking at that one to short possibly. That's a good one. Thank you, by the way. How are you doing it? Well, probably. I don't know if I'm gonna short this one right away. I want to wait until there's a market turn, but it looks as if you're just looking at this chart, and I haven't really been following Planet Fitness. Looking at this chart, I think that okay, it's got a head. When you're looking to short a stock, there's a chart pattern that you should be familiar with. It's called the head and shoulders. And I don't know if I could show it to you, but on the screen, unfortunately, my green screen isn't working with TikTok. It is with YouTube. But basically what it is that it has a right and a left shoulder and then a head, if that makes any sense to you. The left shoulder should be higher than the right shoulder. And then once that happens and it crosses the 50-day moving average, then it will come up and it'll try to rally. And that's when you should short it. It looks to me like it has created it doesn't look like it's created a head though yet. It's still in the formation stages. So, but I just think that this one is a potential short. This is going to be on my list for shorting because I do think this is going to collapse in terms of its price. Another good short on Ultra Beauty. I don't know. Ultra Beauty is an interesting one. Let me take a look at the chart on Ultra Beauty. ULTA. Oh yeah, look at that. Nice. Okay, very good pickup here. Okay, this has a head. Okay, yeah, it's trading up. It's 166. It's been as high as 200. Wow, that is amazing. It's amazing what people will buy. Yeah, that might be a good. Its low is 124. Wow, you could really do well on the short on that one. Yeah, that's a good one too. Let me put that on the short list. Okay, I'm going to do that. Thank you very much. So Planet Fitness and Ultra Beauty. All right. Now, basically, just for everybody out there, what are we talking about here? You think, gosh, why am I so excited and they have a bad chart pattern? Well, there's two ways you can make money in the market. One is to buy the stock and let it go up, and that's a great way. And for the last 11 years, that's been the primary way. But the other great way to make money is that when you have a market like this that is going to rebound you can short the stock, especially if it's an expensive stock, and then when it comes down, you can make that margin by buying it back at a lower price, and that's a very good strategy, by the way. Do you have it? I believe tomorrow is going to be potentially a weak update, but I think by Wednesday we're going to see the market readjust downwards. That's just my opinion. I'm out of the market currently because I closed my shorts on Friday, thinking that we might get a reversal, and sure enough, we did. I was lucky. I made the right decision, at least on two of my positions. I did not on my XLRE. I let that ride. I probably shouldn't have, and I closed it this morning. I was like, okay, I'm out of the money 8%. By the way, I always close my positions when I'm out of the money 8%, or always, even if I think that it may reverse. So it's just a rule that I do, and I've done it for a long time. It saved me a lot of grief. So just something you might want to consider. Let's see. I need to buy puts. Just know how it works. Okay. When you're buying puts, that's a way that you can short the market. The good thing about that, of course, is that if you're buying puts, you don't have to have authorization on your account to short it. If you're buying puts, you are basically betting that the stock is going to go down below the put value, and by having that put, the put is going to increase in value. Now, the advantage of that, of course, is that you're only risking your premium. But the problem with puts, the problem with buying puts, the problem with buying any options is that you're really on the wrong side of the trade in a lot of ways. You want to enter the position typically with cash in your account. Now, why do I say that? This is the reason why I tend to short things in a down market directly, because if I short them, I'm borrowing the shares, I'm selling the shares, I'm putting that cash in my account. So I have that cash in my account to buy back the shares. Now, obviously, if the stock goes up, I'm going to buy it back for more, and I'm going to have a loss. But I'm always going to be in a cash position. When you're buying a put, you are expending money. You're basically buying potentially a lottery ticket, and you can do very well, but you are expending money, and it can expire on you. So I tend to like to sell covered calls and short shares, because that gives me cash flow immediately. And so that's the reason. What do you think about binary options? Well, I think that they can be very good. Binary options can be very good. You can trade them, you can trade weekly options like that. But I think that you ought to look, I think it's probably more wise to look at doing something like the leverage, like the ETFs. I think the ETFs give you the advantages of the options without having to expend the money and have the potential of expiration on you. I just think I think in many ways they're a better way to play the market in terms of a lower cost way and a little safer way. But that's just my personal opinion. Now, a few years ago they weren't really available, so you couldn't buy a you couldn't do this with an ETF. But I think that that's really the way to go. What's the difference between a put and a short? Very good question. When you're doing a short, when you're doing a put, what you're doing is you're buying a contract, and the contract allows you to sell 100 shares of whatever the underlying security is at a set price, and you pay for that. Okay. What you do when you short a stock is that you borrow the shares and then you sell them, and then you put that cash into your account, and then you can hold that for indefinitely as long as you don't get a margin call. So that's sort of the difference. You have to pay for the put, whereas if you short, the short pays you, and that's the difference. Thoughts on trading or natural gas futures? I wish natural gas was going to go up, but I am not confident. I think that there's still going to be an overproduction of natural gas. There's just so much natural gas in this country. It's just amazing. I think we're likely. I would bet against the price of natural gas. I think it may actually go down lower if that's possible. Should I trade both SOX and Forex? Well, it's up to you. The problem with Forex is Forex has a tremendous leverage, so that you can make a tremendous amount of money in Forex. But the problem with Forex is there are things that you can't really judge as well. I tend to be more of a trader of equities because I have more I can figure out more how they're trading. I have more information trading stocks than on Forex. Now that said, I mean you can make if you're an adept trader, you can do extremely well in Forex. But the problem is you're competing against the very biggest banks and the governments of the world, and a lot of times they will intervene in the market. So Forex can be very frustrating if you're not really good at it, but you can do very well at it. So can you trade Forex on TD? I've never traded Forex on TD. I believe it is possible though to do that. Do you day trade? Well, I do now. The reason I'm day trading now is because the market is choppy. Typically, I don't. I am a swing trader because when you're swing trading, the problem with day trading in a relatively orderly market is that you're betting against the algorithmic trades from the big trading houses, and it's sort of a losing proposition. So I typically am a swing trader, which is a 3 to 5 day hold or more. But in this market, the technicals don't mean as much because the market is being influenced tremendously by external factors. So it really is appropriate to be day trading this market. So you just have to change your style depending on the condition of the market. It really depends. I change the way I trade depending on what the market condition is. I start with the market condition every day. I look and say, okay, how's the market trending? Is the market trending up? Is it trending down? I try to always be in sync with that, so that if I'm trading short, like I'm trading now, and the market looks like it's going to move up, I close all my positions. When it moves down, then I open up my short positions. So I'm always trying to trade in sympathy to the market, and that's why I look so carefully at the S&P, the spider, because that typically gives me a very good idea of what direction is going to be in the market. So that's the reason I do that. Now, in a normal time, I don't do that. In a normal time, I'm looking for individual stocks. I'm looking for individual sectors, and that's how I'm doing it. And I'm a swing trader in that period of time. I will be looking to see where the breakouts are, when to buy them. But that's essentially a strategy that you use when the market is more orderly than it is now. It's not orderly enough really to find good swing trades because it's really a directional thing. That's the reason I am not going long or short on any individual stocks. I'm going on ETFs or indexes because of the market conditions right now. Now, when the market changes, and it will, and we go to a more like either an up market or a more sideways market. In a sideways market, I use a strategy very, very effectively, and that is a covered call strategy where I buy the underlying stock and then I sell the covered call to generate income immediately. I am a firm believer in you should try to generate the income as fast as you can. And rather than putting out money, you should try to retain cash. That's the reason why I short. When you short, you put that money into your account. It's restricted, but you have it in your account. So I try to be liquid as much as I can. Do you see another big dip coming? Absolutely, I do. I think that the dip is going to come. And there's just a lot of traders out there that it's always speculation. So obviously nobody has a crystal ball, but I believe very strongly that this is a relief rally that we need to retest. We made a low on the 23rd of March. It was on the spider. It was 218.26. I believe that needs to be retested, and until that happens, I think the market is going to be is not going to find its direction. So if we trade up on the spider to about 265, I'm looking to short it down to about the 225 level. Okay, that I do absolutely. I see another very large dip coming, and hopefully nobody will be going to be caught in that downturn. All right, so I have been on for an hour. I've been jabbering at you. I so appreciate everyone. Be careful today because I think we're going to see a market correction. I think we're going to see a market correction either today or tomorrow, and I think we're going to be headed down again. So be careful. Be careful. What's pushing the market today? This is a relief rally, and this is a relief rally. This is what's pushing it up. Markets don't go down directly and they don't go up directly. They go like this, and then this, and then this, and then up and up and up and up. So I think this is a relief rally. Be careful today buying the SQQQ or any bear ETF. Now, when it changes, that's probably when you want to consider getting into the bear ETF. If you're going to do it that way, that's a way you can short. But the minute it changes direction, you want to close those positions. So thank you so very, very much. I hope everyone is you can trade this market to great effect. You can make very good money in these down periods of time. Don't let anybody tell you can't. Also, do not take with a grain of salt what they're telling you on CNBC. A lot of these people have very large positions. They're trying to sell them out, and they're bidding up the markets so that they can dump their shares. Be very careful. I think we're going down again. Thanks again for everyone watching, and I hope to see you again tomorrow, same time, 11 o'clock. Thank you. And thank you very much for everybody watching me on YouTube, same time.